Hey yo guys, this is your boy Manandothegoat. So in today's video guys, we're gonna be analyzing DXY. So we're gonna start on the daily time frame guys. So as you all know what we do, we highlight the lowest low, we come highlight the highest height. So guys, it helps highlighting lowest low and highest height. I'll show you for you why do I always highlight the lowest low and highest height. And And guys, what do you call? The DXY is still going our direction. So after highest high and lowest low, we now highlight what important levels, which is perfect. So looking at the chart right now, we could see that this thing it's been a what? It's been an uptrend. You get what I'm saying, guys? This has been an uptrend. So for now, there's a level here that the candlestick closed, okay? And there's a strategy that I said I'll teach you guys. So what's done on the low has to also be done on the height. So I can come here and take a trend line from here, one, two, okay, perfect. I don't have a third touch, which is not a problem because they say for a trend line to be accurate, you need 2 to 3 touches. So from the daily time frame, let's move to the 4 hour. So as we get to the 4 hour, guys, it's so much visible that you could see that price came up with an impulse and then now it's giving you a what? It's giving you a correction. Yes, this is giving you a correction. One, two. And again, guys, if you can check starting from here, one, two, three. The reason why you saw this pair selling, it's because it was on the third touch. You understand? But then we sold to this level because of this zone here. If you can check, price is about to form what we could say it's an inverse head and shoulder setup. You know, it's forming what we call a head and shoulder setup. So after here, guys, there's a possibility here, Bafit. So there's a very, very, very big possibility of price coming for a double bottom. So we're gonna see that when we go to the 1 hour. So being on the 1 hour, guys, we could see that I man, the inverse head and shoulder setup, it's like it don't make sense here. Why? The reason it don't make sense is because now you could see that there's a what? There's a breakup. And when there's a breakup, then now it's what change of structure again. Another breakup. So price keep repeating itself, guys. You know what happened here is the same thing that's happening right now. Like if we can just keep catching all these moves, poverty is gone, Bafanas. You understand? What repeated here, it's what's repeating right now. So now we are removing this zone because it's useless. We thought maybe it's gonna be on the what in pass held and shoulder setup. Mara decided to be on other timings, which we don't care. So when it's like this now, ne? When price is like this now, okay, let's just push this one. This one is for the target, yeah. So I strongly believe what happened in the past will also have to happen right now. And again, guys, you could see if I take a trend here, we go up. Again, there's still a what? There's still a breakout. And all these breakouts, guys, they were giving us what? They were giving us same thing. You get what I'm saying? Same thing. So and again, guys, after here, then we need to look at price, you know, because since price started from there, then we're gonna go long. So if you took the position from that level, if you took the position from this level, where's the level now? If you took the position from this level, and then now you have to at least have a stop loss like this. So this is just a continuation signal, and then the take profit is gonna be like that. And again, a tool that I would use net to determine what's happening here. I'll use this tool called the bar pattern, Google bar pattern. So I'll take the impulse of the previous structure, which is that one. Now, from here to here, now again, and the way in Ghana. Okay, from this level going to that level, perfect. So if we were to take that level, right, and we can put it here, you could see that price will drop till what? Till that price. So now I can even extend. So this is it, guys. It's your boy Manando the Goat.
Trading forex is actually easy. Of course, only if you know what you're doing. So I'm gonna show you how you can make forex simple for you. Hey guys, what's good? This is CristHendrix back with another video. Today we're having a short little session about the trades that I took these past few days. So I'm on our Instagram page where we post setups. So you can see we post a lot. We damn near about 200 posts in. So I'm gonna show the top 3, the recent ones. So first off, we are gonna look at Nasdaq and how we caught this buy basically. So let's jump straight to trading view. And what we're looking at right here is, just a very basic structure of the market. The market moves in 2 phases, right? So the market moves in an impulse correction until the market turns. It will move in an impulse, correction, impulse, and so on, right? So here from this point, from this low, we had the market having an impulse to the upside and it just started going sideways. So some people might be discouraged by this huge movement where the price was just, going sideways without a direction. But the thing is, you can actually trade within this range. All you need to know is the principles about how the market moves, whether you're in a corrective phase with the prices bound to, your levels, and it just ranges sideways. You can capitalize off that. You can capitalize off these impulsive moves as well. So everywhere there's technically opportunities, you just have to spot them, apply your strategies, and then capitalize, hopefully. Let me just erase everything because it might seem a bit too busy. So with indices, I don't really scale up to the big time frame, so we're just gonna kick it off where we are, which is the 30-minute time frame. And so when we look at the price right now, what we notice is we had this channel right there, and it shouldn't, discourage us from trading. So what you have to do is basically get your support, your resistance. Here would have our resistance. So we had a few opportunities within this range, but today we'll be talking about this buy that we had, which was posted 2 days ago. So let's zoom in into our price. So remember, so far we have our support and resistance, right? So when we count the touches at our support, we'll consider this as our first touch, second touch, and our third touch right there. The price failed to touch right there, failed right here, as well as right there.
What the hell?
So we know that we have 3 touches on the support. That gives us an idea that the price might be moving away from the support to the resistance, because usually when it comes to your third touch in your structure, the price will have, it will give you the highest probability when it comes to getting your entries. So let's focus from this point. And when we zoom in, so you can see the price was impulsive from support. And there, instead of reaching the resistance, it just turned back down. Reason being, it obviously wants to create more liquidity so that the price can actually have strength to push up. So this area right there was a high value area. It's the third touch of the support, which means there will be a lot of value right there. So typically the market will try to come back to these high value areas, take them, and then collect or accumulate the liquidity, the value, or whatever you want to call it, and then proceed with its initial movement. In this case, it's a buy to the upside. So you could have considered this as a double bottom, but say you didn't want to trade within this zone because maybe you felt like it was too risky or whatever the case may be. All you had to do was remember that the price moves in 2 phases. So it will be an impulsive phase and a corrective phase. Impulsive phase, corrective, and so on, right? So just pay attention to what we had right after this double top, right? Double bottom. We had the price giving us a sharp impulse to the upside. That would have been our first phase of movement in the price. And then here we had something very interesting. We had the price correcting, which is the second phase of price movement. So when it comes to corrections, we have different types of corrections. We have the continuation and we have the reversal as well. So in this case, we're expecting the price to reach, this blue shaded zone, which is our resistance. So we know that after this impulse, we should expect a corrective continuation right there. So let's refer back to our screenshot so you can see that is what we were trading. Basically, we wanted to capitalize off that correction because we had a hint that it could be a continuation correction for the price to continue going up. So what you had to do there is get your parameters, which will be your resistance as well as your support. Right there. So when it comes to trading a bullish correction, you focus on the support because that's where you want to take your trade on. You don't want to take your trade based on the resistance when you're trying to buy, right? You want to buy at the support. Okay, fine. So we're going to follow the same concept where we would trade at the third touch. So we have 3 touches right there. First touch, second touch, third touch, right? Because we had this pullback right there, another pullback, and then the last pullback, which was our third touch. So right after our third touch, which is this area, you'd want to see rejections, you would want to see reversals and change of momentum and so on. And then that's where you could enter your trade and buy right there. So there would have been a nice 1 to 8, almost 1 to 9. And that's technically the setup that we had for Nasdaq. Very simple, nothing complicated. That's how you would have capitalized off that one.
I want to hear your heart.
So let's move on to GER30. Very similar. Very similar behavior. So let's get straight into it. GER30. Okay, let me raise. Okay, I don't think I have to raise because it's damn near the same setup. But with this one, we didn't have, a channel where the price was just going sideways. Instead, here the price just keeps climbing up. So it keeps correcting all the way up. Once again, this could discourage you as a trader. You could think these are, the worst market conditions you could get involved in. But, there's still opportunities within these conditions. So let me zoom into where we took our trade. So basically you can see this the setup that I had, which is a bullish continuation, just like the Nasdaq setup, very similar. So this one, I didn't really use a lot of price action. All I did was I just spotted a correction and basically winged it. So didn't even do my highs and lows. So basically I just saw this corrective movement right there, and the price gave us an impulse, gave us a correction, impulse. So this was a very basic trade. There was not a lot that went into it. But then the concept is still the same, where you have, your third touch being your highest probability. So here would have the first touch, second touch, and the third one right there. Execute at the third touch, and then just swing to your TP. And you can see, even after this huge pullback, the price recovered and created a new high. So if you are such a swing trader, you could have gotten away with a nice 1-to-7 ratio trade. So it's a good trade, to be honest. So let's go to the final setup. So it seems like we had, a pattern where we were having solid bullish setups that are very similar to each other. So the thing is about, winning all your trades, you should try to use one of the few setups that you have a high, what can I call it? Basically, if a setup performs so well for you, you should basically stick to that setup, because you have enough back testing on it, you have enough research, you've seen it happen way too many times, basically experience. So I'm showing you 3 setups that are very similar to each other and they all worked out. So that's how you could basically make trading very easy for you. It's by realizing which setup works to your advantage, which setups is likely to lose, and just try to avoid those and take the winning ones. So just create your own scenario where you have winning setups, losing setups, so you can always consider which setups to take and which to avoid.
That's that real music, man.
So yeah, we had Australian dollar against Swiss franc, bullish setup, and we actually had multiple opportunities with this one. So let's dive straight into it. Okay. Yeah, so this is the setup we had right there. But let's look at what we have in the big time frame, because right now we're dealing with currency. We have so much to consider. So the price was in a downtrend for a while, probably since 2 years ago, and now we've finally reached this historic low right there, 2020 low. So that's damn near 5 years ago. Yeah, so that's the reason why I have this support right there. And just notice how the price gets to the support, right? It doesn't just get to the support and then bounce back up. It just started playing around the support before that breakout that we traded. And that actually tells you so much about what the price is doing or it's trying to do or achieve. So when the price reaches your levels, whether it's your support or resistance, it could reach in an impulsive phase or in a corrective phase. So right here, we reached our support in a corrective phase because the price started correcting. What that means is we could be looking at a reversal correction instead of a continuation correction. So we're still in the daily. All you have to do is draw the parameters of this correction or structure, your support, your resistance. And if you notice, we have 3 touches. Once again, 3 touches is fundamentally so important because the 3rd touch will definitely have the highest probability. So this is the 3rd touch. Let's pay attention to the 3rd touch.
Just peep game and lock in.
Just look at how the price got to the 3rd touch. It got there correctively once again. This is the correction I'm referring to right there. So what that tells you is that the price is most likely to reverse, because this type of correction is not a continuation correction. It is a reversal. So the only way to differentiate between these 2 types of corrections is that the continuation correction will be flat in nature, right? And obviously, both corrections have an impulse prior to them forming. So you would have your impulse and then your correction. So with a continuation correction, it will be flat, just like that, flat, right? And it will just continue going to the direction where it was initially going. And then your reversal will be slightly different. You'll have your impulse, and then when the price starts correcting, instead of being flat, it will just keep correcting up, right? So you can see this is not flat, this is more vertical. And say it's doing this, trying to reach maybe a resistance or any type of zone, whether it's a resistance or a support, and it reaches it in this kind of manner where it's correcting, it's likely to reverse.
Type shit. What?
The touches on the resistance side of the correction, in a case of an uptrend, the touches on the resistance, you should have at least 3 touches. Pay attention to the third touch, see what the market does. So let's go back to our setup. Let me just erase this. So you can see with this correction, so it's just the opposite of what I just said. This is correction where the price was in a downtrend. So when we look at the support of the correction, we have 3 touches once again. Third touch, highest probability. So technically, you could have used this as your initial entry to this market movement, and you could have had a buy right there. But unfortunately, we were not on the charts when that happened. But which is okay. Let's scale down to the 4-hour time frame, see what we have. Okay. So price moved away from our third touch and it just shot up. So when the price is in this kind of phase where it's just giving you an impulse and you're still trying to look for entries, the only place where you're gonna enter is the next correction that is gonna form. So the price had a pullback, and I know some traders will have some kind of zone right there, and then they'll call it, breakout retest, buy the retest. That's cool and all, but in some cases it might not work. But I guess in this case it did. But anyways, we were patiently waiting for those corrections to form for us to enter the market, because we know that the price only moves in 2 phases, which is an impulse, correction, impulse, correction, impulse. So after the pullback, you can see we had an impulse, and right there we had our first correction after this huge impulsive movement. So this correction was a very high interest point to us. So if I scale down to the 1-hour time frame and go back to that correction, you can see it's more flat in nature compared to, a very steep correction. So we know that this is a continuation correction. So we have our resistance and our support side of it. And you can see that we had this as our first touch, second touch, and our third touch right there. First, second, third, but the third one technically didn't touch the actual support trend line, but it is okay because you can somehow, just scale in inverse head and shoulder pattern right there, and it could still work. Or you could use a double bottom pattern right there. It works, but the whole point of it is having 3 touches, and we do have those 3 touches: first touch, second touch, third touch, you buy. So that's the whole concept of it. So coming to the actual trade that I posted 7 hours ago, we had this beautiful continuation correction. You can see it's very flat. This is damn near picture perfect. We have our resistance, we have our support right there. And, you know, when we count the touches on our support, this will be our first, this will be our second, and our third touch. Third touch, highest probability, that's where we'll start looking to execute. So something very interesting happened. You could have entered right after reversals, rejections, and change of momentum, and just buy directly at the third touch, just like that, or just wait for the price to give you a small correction after the impulse. So you can see right here we have this mini impulse followed by this mini correction right there. So if you did miss the entry, the initial entry right there, you could have entered this correction or the second correction. So you can see the price is just repeating itself from the big correction to the small corrections and these corrections right there. So it's just the same thing. So for you to make trading very simple for you, very easy, just use your most basically winning setup, and you will yield your best results because you are very comfortable with that setup. You know how it behaves, you know how to execute it. So that's my best advice. Check which setup works best for you, and then just try to utilize that setup to its maximum. So for me, I just trade the simple impulse correction strategy, but obviously using the full price action, because you do need to know what everything means basically when it comes to your highs, your lows, the type of structures you're in, whether it's an ascending structure, descending structure, or sideways channel. You still need to know those aspects of it, and you just use every single thing, consider all the principles, and then just come up with one safe setup that will guarantee you a win or a return on your investment. So that's it for today's video. It's a quick short video. We haven't posted in a while, so I just felt like giving you this quick rundown. But if you made it to this point of the video, thank you so much. Hopefully you guys tune into the next episode. That's it for today.
Type shit. What?